Welcome back to this week's episode of the Concierge Corner. Now, before we talk about today's strategy, I'd like you to imagine something. Think about a client that you've served for years. Now, the someone built something meaningful, whether it's a business, a farm, real estate, or some other highly appreciated asset. Now, not just for income, but as part of their legacy. Now, picture this. After decades of work, that client finally sells an asset, a highly appreciated asset. And in that moment, they feel accomplishment. But they also are hit with something else, a massive tax burden. And that feeling of a lifetime of work may shrink considerably. Everyone like you and me has a client just like this. And most clients assume that taxes at a sale are just simply unavoidable. And the reason? Well, financial advisors, CPAs, and attorneys almost always say the same thing. You've made the money, now you need to pay the tax. But here's where you come in. You can have a conversation with your clients that goes something like this. Mr. and Mrs. Client, I understand that you recently sold or are about to sell a highly appreciated asset. Have you ever thought about how much of that gain is going to go to tax? What plans do you have in place to help mitigate those capital gains? Then let them answer. And if they don't have a plan, then you can say, well, would it be safe to say that if you could reduce and possibly recapture those capital gains taxes, that you would want to know about it? That would be fair to say, right? So here you are. You can help your clients see that the real goal just isn't selling that asset and paying the taxes and then just managing what's left. It's about converting that lifetime of work into a legacy that lasts. So today I want to introduce to you a framework that could reshape how your clients make decisions on when they sell a highly appreciated asset. Now, I call that the tax legacy compass. And what it does, it combines a charitable gifting strategy with life insurance into one plan. And here's the mindset behind it. When a client sells an asset, they're looking for direction because obviously most people would not want to pay more to the government than they have to, right? The tax legacy compass is a tool that positions you as their trusted navigator to assist your clients in reducing their capital gains tax, recapture the remaining tax, and possibly eliminate future tax from the sale of that asset. Right now, I'm going to show you a real-world example on how this mindset was set into action. You'll see the results on how a client took what could have been a major taxable event and instead turned it into income, legacy, and as you will see, something that was very impactful to their lives. I'll see you on the other side of this video. Hi, my name is Don Teagues. I'm the Director of Advanced Strategies for a multi-billion-dollar financial services firm right here in Minneapolis, Minnesota. And if you've seen any of my other videos, you know that I talk about reducing, recapturing, or possibly eliminating taxes, your capital gains taxes, either now or in the future. And today I want to talk about a real life case study where we did exactly that, where we were able to reduce, recapture, and eliminate this client's capital gains tax. Now, in this example, we're talking to Mark, who is 55 years old, sold half of his business for $5 million. Now, his capital gains tax options are either A, do nothing, take that $5 million sale, pay the $1.6 million of capital gains, and walk away with $3.4 million, which actually isn't that bad until we shared with him his strategy where we take the same $5 million and instead of paying $1.6 million into capital gains tax, we're able to find a $1.6 million income tax deduction. And then we turned that all into an income stream where he would receive $272,000 each and every year net of tax. That's after tax income from when he reaches age 65 and goes all the way through age 100.
Now, what does that look like? So he could still do nothing, walk away with the 3.4 million. But if he reaches age 85, he would have been able to take out $5.3 million out of that account net after tax and still have $2 million inside the account. So in the event he passed away, there would be $2 million there that are also tax advantage that would go to his heirs. So that gives him an additional value of $3.9 million over and above this do nothing strategy, right? All right, so now let's say he reaches the ripe old age of 100. He would have been able to take out $9.5 million net after tax out of that plan and still have $750,000 that's tax advantage to go to his heirs. And you can see here, that's a $6.8 million additional value than just walking away with the 3.4 million. So the overall summary, yes, we were able to reduce his capital gains tax. We recaptured the remaining tax. We eliminated future tax and also increased the inheritable value of his asset that he sold.
Now, this is just one example. I helped a 75-year-old widower in Pennsylvania reduce her capital gains tax and increase the inheritable value of a stock position she held. Another client who sold some farmland in North Dakota also took advantage of this strategy. So I want you to think about just one client in your book who could benefit from this. Someone who this year sold or is in the process of selling land or a business or any highly appreciated asset. Someone who wouldn't mind the tax sting to be just a little bit less. So I'm sure you're aware your clients want to make the most of what they have built and do not want to lose a significant portion to taxes. And the Tax Legacy Compass aligns with that goal. It connects wealth, purpose, and protection even before they realize they need a strategy. So here's the next step. Identify one client who could benefit from this. Reach out. Start that conversation. Like, have you thought about how much of that gain is going to go to tax? What plans do you have in place to help mitigate those capital gains? And if I could show you a way to reduce and possibly recapture those gains, the taxes on those gains, and make that money work better for you, would you be open to having a conversation? And as always, I am here as your concierge resource when that conversation happens. And together, we can help your clients keep more of what they worked a lifetime to build and turn it into income, legacy, and an impact that lasts. If you want to walk through the strategy with a live client situation or want the step-by-step guide to introducing the Tax Legacy Compass in your practice, reach out to me at 763-265-3297. All right, thank you so much for watching this week's episode of the Concierge Corner. Next week, we will continue the conversation on other strategies to help leave tax-free legacies. Until then, if you have any questions, feel free to reach me at 763-265-3297. See you next week.